Vikas Khemani, Chief Executive Officer with Edelweiss Securities, joins us live and he joins us in our House View of the Month segment. Vikas, good morning. Thank you for joining us. Vikas, although benchmark indices are trading at a record high, the underlying action, I'm afraid, is not inspiring a lot of confidence. We are no longer staring at a thrusting move. Choppiness has kicked in and some degree of profit booking is also evident.
I think this kind of behavior typically would happen, in this kind of market, because I think markets really expecting the, strong result outcome, and result outcome is still not done. And I think we are still, going through the election phase. So somewhat, I think, market factored in a great outcome. And I think till the time we see really the outcome happening on 16th May, market will consolidate. Market will kind of try and find the, some sort of churn of the investors, and I think that is what is right now undergoing. But having said that, if you see the kind of width which we are seeing in the second tier counter, mid cap counter, and apart from the frontline counters, I think also is very encouraging. According to me, you are seeing fairly large number of counters hitting new highs every single day. So I think that shows the width is building, confidence is spreading. So I would say that don't look at the frontliners. Frontliners ran ahead, and then the rally has moved to this second tier counter, and I think that is bound to happen. And I think probably, depending on how the outcome comes on 16th May, you will start seeing some amount of resumption of the finding a new direction on the markets.
Vikas, so would the new direction then take us to 7,000 plus levels if indeed it's a favorable outcome on 16th May?
Absolutely. I think, if there is a stable government comes in place, and I think, again, as I said that earlier also, that it will depend on what kind of numbers it will come with. If, let us say, BJP or NDA is forming government with clear majority 272 plus, I think market will give a strong thumbs up to that, and you will see, sort of a resumption of rally with a strong momentum. But let's say the numbers are anywhere between 230 to 270 and they need to look for a partner, then I think market will probably set in for correction for some time. But having said that, these are only, I think, according to me, short-termish issue. But macroeconomic factors and economic growth factor, if you look at, I think we will sort of start resuming, rally and from medium-term to long-term perspective, if you look at, I think macros will start falling into place, and I think equity markets are set to do well from that medium-term to long-term perspective.
So, because to your mind, markets clearly are not factoring in a clear NDA victory, and a clear NDA victory, let's say if it is above 270, will be a game, will really add another 5% to the Nifty. Is that what you're indicating?
Absolutely. I think, there are still lots of investors who are wanting to see clear direction, clear outcome, clear mandate before committing any serious money. Whatever we have seen so far is a great thing which has happened, and I think good money which has come in. But still there is a fairly large amount of, investor set which is I think, still underinvested or, underweight in India. So in my opinion, that money would come in and that would drive the sort of markets up. And I think also, so far we haven't seen any retail money coming in India. Domestic money is still sort of missing. I do feel that you start seeing domestic flows also kicking in Indian economy.
Because if I look at the subscription, what the Wonderla IPO has got, first IPO of the season oversubscribed to the tune of 40 times, and I wonder why we say retail is not there.
No, I think, Nikunj, if you see, Wonderla success was very, very clearly, I think it's a very good quality company, and I think there's a, sort of latent demand hitting, in terms of IPO market. It's a long, one IPO which has come after a long period of time, and I think, so retail would participate in IPOs because I think they are typically safe, considered safer and good quality company. I think retail make money on the listing immediately, and I think that's the reason you saw a huge amount of retail participation in this IPO coming in. So I am not making a point in that retail in market, in general, through mutual fund and all, we have still not seen, but I think still retail is very, very attracted toward direct investing, IPOs investing, and I think we think, Wonderla IPO was a very clear indication of the fact that, if there's a good quality company and there's a right distribution reach, you have, I think in any IPO in this kind of market ahead of an uncertain event also could be made very big successful, and Wonderla IPO, I think, was a classic example of that.
Because the last time we chatted with you, you were bullish on the prospects of Infi, Tech Mahindra as well as TCS. Post the earnings now, do you still hold that bullish call?
I think, see, we have been very positive on IT as a sector, given the fact that there's a strong demand outlook in the developed market. And I think we continue to maintain that. In the shorter term, I think you will see, quarterly earnings, kind of sometimes, encouraging, sometimes discouraging. And also in shorter term, you might see some sort of pressure on the IT stocks because of the rupee movement towards stronger trajectory. So I think that can sort of keep stocks under check for some time. But if you look at the historical performance when the rupee was on a stronger trajectory and the demand outlook was strong, I think IT stocks still did very well at that point in time. So I think key thing to watch out is, according to me, is the what is the demand outlook in the developed market for the IT companies, which continues to remain strong. I think IT companies would have a lot more levers in terms of capacity utilization, in terms of expanding margins. So I think those things are, in a strong outlook environment, always turns out to be positive. So we do think that IT, if you just overlook the next couple of quarters from a strong rupee movement perspective, I think still will end up doing very, very well. And we remain very positive on both Infosys and Tech Mahindra from medium term to long term perspective.
Okay, so let's understand, why are you bullish on Infosys? And clearly on the street you have one of the most high conviction ideas on Infosys. Now markets, they always look at not absolute performance, they always look at relative performance. And on all the matrices, if I map the absolute performance of Infosys versus industry peer, it is really lowest in the pecking order. What makes you bullish on Infosys at a time when there is no sign, no clarity, or no indication of a turnaround?
So I think, Nikunj, we must understand before taking a call on Infosys that organization of this size takes time to turn around. I think probably once Nayanmurthy got appointed back, market started expecting too quickly a sort of turnaround kind of situation. And I think this is just not possible. So I think, in my opinion, it takes time to turn around this kind of organization. And our belief is that, I think, whatever right now exercise which is going on based on our interaction with the management, I think are in right direction. Having said that, have they reflected in the recent quarterly earnings? Maybe not. But I think we'll start reflecting maybe 3 quarters, 4 quarters down the line. Our expectation is very high. Now, I think investors who are looking to invest from a relative perspective, I think maybe are better off in remaining invested into, at TCS, which is also a very good company, and we are positive, or at Tech Mahindra, which probably maybe next 2 to 3 quarters they might outperform. But if you look at slightly medium-term view, we think that Infosys will offer both growth as well as the re-rating. Because I think still it is trading cheaper than all the peers, rightfully, given the current context. But from a medium-term perspective, we think you will see a re-rating as well as the earnings growth coming back, and that will drive sort of better performance in the stock market. Hence, it is only the difference is only of the time horizon rather than anything else. And our belief in management continues to remain very, very high.
Take a look at UPL. That's now sitting at a fresh record high, surging volumes as well. This has been one favorite of late. 242 is where the stock is. Unitech, Siemens, Karnataka Bank, Apollo Hospitals, Jain Irrigation, GMR Infrastructure. These are some other names which are looking good, but definitely UPL is the one which is sitting at the top of the pack. Almost 0.4 million shares traded. It's a 6.6% appreciation that you're seeing on this one. Good breakout is what it's giving you right now. But Vikas, you often talked about, your preference towards capital goods purely because of a valuation catch-up that's playing out. What is it that you like from the cap goods space?
I think we've been pretty positive on the entire space, L&T being the top pick, right from it was 750 rupees, and we continue to remain very, very bullish on that. Again, I think capital goods sector is expected to see a strong activity as the economic turnaround happens, as the economic revival happens. And I think the great part about this sector is there's a huge operating leverage in place. All these companies have been kind of either incurring capex or have been trying to consolidate, and I think the capacity utilization have been very, very low. And as the environment picks up, as the capital formation picks up in the economy, there will be sudden pressure on all these companies to deliver faster. The outlook order book aggression will start very, very rapidly. And I think we do think that this segment will, in next 12 to 24 months, will do very, very well. And I think you are best placed in terms of name of stocks like L&T, Thermax, Voltas. I think pretty much entire basket will do well. Again, you'll have to choose the stock based on your risk reward profile, liquidity profile. But from the large caps which I mentioned, we like all of these stocks.
Because, but for real demand to come back, the investment cycle has to start, and for investment cycle to start, fresh investments have to start. Now, corporate India is not sitting on a very cash-rich balance sheet. Government of India is pretty much committed to maintain a fiscal deficit target, which means they are also running a tight balance sheet. So I wonder who will really kickstart the new investment cycle? Where will the money come from?
Because I think if we have the right amount of policy clarity, I do believe there's an ample amount of money available. It is the question of right now, I think, belief in the system. I think still most of the corporate India, and especially if you look at the corporate India, which is, sitting on the solid balance sheet, they've been looking to expand. They've been wanting to expand. So I think that it will be two-phase process according to me. First is to kickstart with the existing stuck-up projects. Second, I think, and so one on the capex side, if you look at some of the infrastructure projects are also stuck up for the want of policy. So I think if you just kickstart that itself is good enough to kind of drive some amount of growth and demand. Second phase, you can come out with the, sort of policies and growth boosters, which can again last for 5 to 7 years. So according to me, if you just do the first phase right in next couple of quarters, we should be good. And then followed with how do we get the structural capital formation, that because still India is fairly infrastructure starved country. There's lots of demand, whether you look at, power, ports, roads, railways. I mean, just to give an example, railway itself is a very big investment item. I mean, today, if you were to have a right policy in railway, I do feel that there are lots of foreign investors wanting to invest into railways, lots of domestic guys want to invest into railways. Provided you have the right policy, I think you could, that itself would be a very good sort of sector to spur the investment activity in the country. So there are many such kind of avenues available according to us. Defense is another such example where I think NDA government, BJP has spoken many times about it, that if they come to power, they will start doing something about that. So I think defense is another vector of sort of investment growth starting to pick up in the country. There are many such vectors available according to us.
Because you've often talked about, your tilt towards the private banking law. Do you not think that a stable government would bring about more of a revival when it comes to the PSU pack, and which have been, running up off late as well, the PSU banks, that is?
I think the reason why we've been always liking private sector bank over public sector bank is for three reasons. One, I think most of the public sector bank is sort of right now starved for the capital. And I think for government's ability to recapitalize them in a serious manner right now is very limited. So from next 12 to 18 months perspective, I think that one big challenge will be there. Second big challenge in the public sector enterprises is, I think, the talent scarcity. I think most of the senior management has been sort of, in next 2 to 3 years will retire, and the new they have not had a significant amount of recruitment in last 8-10 years, and that will start sort of catching up on them. That is second. And thirdly, I think the asset quality issue still is fairly large. So I think if you look at all these three issues, according to us, and also, if I were to make one more factor, is that technology side still banks are getting ready, and not all the banks are very, very ready. So I think the loss of market share in favor of private sector bank has been accelerating, will accelerate more as the environment changes. So I think that is the one reason. I think today they are 75-25. According to us, I mean, no sector where the private sectors are sort of fairly active and growing well. I think this kind of market share can be maintained in an open economy. So I think PSU will slowly lose market share in favor of private sector bank. Hence, we believe that private sector banks, from a sheer growth perspective, in a highly economic growth environment, will do much better than the public sector bank. And that has been the key rationale for that.